if you are charitably inclined and looking for ways to give and maximize some tax strategies from the giving that you're doing as well. Afternoon. Hope you all had a great Thanksgiving. We are jumping into Jobs Week here this week, and a great question of the week from Lucy about charitable giving to end the year. I'm Brandon Steele, financial advisor with Mainsail Financial Group, and our goal every Thursday is to bring to you the market news, the data, the trends we're watching, hopefully weed out a bit of the noise along the way. And again, this week, getting back after the holidays and a bit of a shorter week last week in trading, we will be primarily focusing on the jobs data we've been getting since then, but we will kind of close up with a great question on charitable giving strategies as well, which a lot of people have on their mind getting closer to year end. So let's start with jobs. So there's a couple quick things, and honestly, this might be a bit shorter here today, given that it's really pretty heavily focused on the jobs data side of things. But I did want to cover a couple things. So on Tuesday, we had job openings or JOLTS numbers come out, and job openings were at 7.7, a little over 7.7 million, a little bit of a tick up from last month. So again, job openings would be a higher number, would be a negative in general. It means that there's a discrepancy in the labor market, right? The higher that number might be. Yesterday, we had ADP employment report come out. That shows that we added only 146,000 jobs. So not a good sign here. If you couple those two together, it would kind of suggest the same thing we've been watching. Although there has been conflicting data in the labor market, the general theme has been that the labor market's been struggling quite a bit. Now that said, 7.7 million job openings, like that's still a very large number. So, there's obviously a lot of positions to be filled, but this has been an ongoing challenge for sure. And the ADP employment report kind of highlights that to some degree. Now, that said, keep in mind, last month, I believe, the ADP employment report had a really negative print as well. And then the non-farm payrolls number that we get tomorrow on Friday was actually really strong. So, again, these numbers are, they vary pretty wildly lately. And that is one of the challenges that we've been seeing this year, is that these data points, as they come out, are often getting revised significantly. So it's very hard to read too far into these as they come out live. You might remember a couple months back, we shared the updates on some of the jobs numbers over the past, I think it was 6 months or a year prior. And the discrepancy was just astronomical. So it is very hard to take these numbers at the surface level. And we will obviously, continue to keep an eye on how these translate moving forward. But nonetheless, still important to watch because it's our kind of first glimpse at how the labor market is shaping up, right? And then to round that out, today we had initial jobless claims, which ticked up slightly from last week. So 224,000 on the initial jobless claims number. But that doesn't quite finish us up here for Jobs Week. Tomorrow we get the non-farm payrolls or the employment report, as well as unemployment. And then mid next week, we actually get some inflation data as well, which will be really important to watch to see kind of how that translates to the Fed meeting coming up here on the 18th, I believe it is. But before we break for this kind of shorter week in data, I do want to touch on a really good question of the week about charitable giving. And although this is something that I think came from Lucy, I think that a lot of people deal with this question at this time of the year. It's a perfect time to talk a little bit about charitable giving. Hopefully we're not catching this too late since it is December, but there's obviously still some things to be done through the end of the year if you are charitably inclined and looking for ways to give and maximize some tax strategies from the giving that you're doing as well. So I'm going to touch on 5 different pieces here. The first thing I want to touch on is what's called a QCD, or Qualified Charitable Distribution. A lot of the clients that we work with have significant assets in their IRAs or 401ks, and they may not necessarily need to spend all of the money they have in those particular vehicles. As you are probably very well aware, when you hit a certain age, the IRS actually forces you to take money out, called a required minimum distribution, and that is fully taxable. However, for those who are charitably inclined, you can basically use what's called a QCD, Qualified Charitable Distribution, as a way to divert some of that money directly to a charity. Now, this must be done the correct way. You can't take it and then give it to get the same benefit. You need to make sure that the custodian does this on your behalf and sends it directly to the charity. but you can take a QCD, which would satisfy all of, or a portion, I should say, of your RMD, how, to the degree that you want to distribute that. There are some limits, so bear with me a bit. But basically, you could satisfy a portion of your RMD through this charitable distribution, and it never hits your income. So from a tax perspective, that money is never recognized as income for the year, right? Huge opportunity there for those, again, who are giving anyway, and maybe able to do it through a QCD, especially since there are some challenges with the current, with the standard deduction so high, you have to give quite a bit to get a tax break on your charitable contributions now. I'll talk about that here at the end. But this is a way to get the tax break without having to deal with that standard deduction and trying to find other things to go over it. Second thing I'll touch on is charitable led and charitable remainder trusts. This is a great way for somebody who is charitably inclined to either put money into a charity and draw some income against it in the meantime, or have the asset but make sure that something goes to a charity when the time comes. So this is a little more nuanced. It certainly is a little bit more permanent, but can be a really good strategy for those who know that they want to leave money to a charity. The third I'll mention is gifting appreciated assets. So if you basically use, let's say you own Apple and you bought it at $10, and if you were to sell it today, you might pay significant gains on that outside of a retirement account. What you can do is actually give appreciated assets to a charity, or maybe a coupling of some strategies we'll talk about here in a minute, which would allow you the full deduction on the total amount, but also not have to deal with the capital gains along the way. So that's also a great opportunity as well. The fourth thing I'll mention is donor advised funds. And so this is a relatively newer strategy, but what you can do is set up what's called a donor advised fund. And this basically allows you to put a significant amount of money into an investment for charitable purposes, but you don't have to distribute that money all to the charity in any given year. So especially if you're looking to take advantage of a certain tax challenge or something like that, you can give significantly and then spread out your distributions over the years, but get all the tax benefit in year one. Now, keep in mind all these generally must go to a 501c3, but also keep in mind that for a donor advised fund, for instance, like once you give it, it is charitable money. So just keep that in mind. This isn't money you can give and then take back out for your own purposes. You want to make sure this is earmarked for charities specifically. And so if you gift appreciated assets to a donor advised fund, you can see how coupling some of these strategies could be really beneficial as well. Last thing I'll mention is bunching. So given, I guess, the news, especially around the election, where it's maybe more likely now that the standard deduction might stay higher for longer, but even regardless of that, this year and next, it will. A lot of folks who are giving annually may not give enough to offset that standard deduction. You have to give a lot in order to actually get a tax break from it. If you find yourself in that boat, one of the ways that you can do this is, instead of giving every year, let's say $5,000 or $10,000 a year, instead you could give all of that in 1 year and then not give for 5 years. And what that does is it allows you to take advantage of that, that increased deduction that you would get above the standard. Still give the same amount over that period of time, but now you're actually getting a tax break. Whereas if you had spread it out, you may or may not, just based on some of your other deductions. So hopefully that's helpful. It's a great time, obviously, as we get a little further into December. And what I will share is, again, especially if you can kind of couple some of these strategies, there's a lot of great ways to take advantage of these different pieces. There's more than this, of course, as well, but these are some of the 5 most common that we see. So hopefully that's helpful. Thank you guys, as always, for joining, and I hope you have a great upcoming weekend.